Hi, it's Dwyer, gamblersadvisory.com, a free site. Also, wealthspinning.blogspot.com, a free site. Today is November 11th, 2025. Nothing I say in this video should be construed as investment advice. I want everyone to do their own due diligence. Your operating assumption, if I mention any investment vehicle, any stock, should be that I'm either interested in owning it or that I already do. Right? Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, we're in an era, first the overview. We're in an era where the Buffett indicator, the Shiller PE index are both overextended, right? It shows that investors are paying for something they're not getting, right? Both are double what they should be according to historical trends. So the stock market is overvalued. We know that. But it's important here to be careful, right? You can't look at the stock market as one stock market. You have to view it as a market of stocks. Likewise, you can't look at the tech sector of the stock market as having one trend. Every company is different. So one town over from me, literally it's the next town over, is Saratoga, California. Now, you never hear about Saratoga, California when they're talking about, you know, wealthy areas, right? You'll hear more about Beverly Hills or Boca Raton or someplace like that. Just understand, Northern California is its own world. It's different than Southern California. Right? In Southern California, people have bling. You go through Beverly Hills, Bel Air, and, it's glitz, Rodeo Drive, right? It's, hey, I've made it and stuff like that. Northern California, just look up the demographics. Just look up the wealth concentration. Areas like Los Altos Hills, Saratoga next door to me, are loaded. Right? They're loaded. Let me just tell you too, you hear about these financial capitals, Wall Street, Manhattan, places like that. Just understand that Silicon Valley, right now, places like Palo Alto, these are towns you may not have heard of that much. Menlo Park, right? Los Altos. As wealthy as they've been, they're about to embark on a level of wealth that's higher, right? If you track crypto and you think about, Andreessen Horowitz and other outfits out here in Northern California, you realize they are extremely well positioned if things break a certain way. If crypto explodes, if AI explodes, right? Just realize Apple, Google, Oracle, they're all out here. They're going to explode. So right now, one town over from me, Saratoga, California, there's an investor there, Michael Burry, right, of the Big Short fame. And he, of course, has announced that he's buying put options on some major tech companies. Now, let's pause it right here. Folks, you need to differentiate between the tech companies. Right? On YouTube are many videos where people are saying, oh, tech's overextended. Tech's a bubble. It's about to collapse. Then, of course, the speaker will point to Michael Burry and he'll say, look, he's shorting, Palantir. The notional value of the Palantir put option exposure that Burry has is $912 million. Right? They'll say he's shorting NVIDIA. The notional value of his NVIDIA put option strategy is $187 million. So let's pause here and realize a truth. His position on Palantir is more than $700 million higher than his position on NVIDIA. Right? The story here is really Palantir. It's not NVIDIA. Right? He has a short on NVIDIA. Don't get me wrong, $187 million is substantial. But it's not $912 million. Right? Folks, what I want people to realize is that in this world where the market is overvalued, where Warren Buffett is hoarding a lot of money, right, where a lot of people are moving toward cash so that when the collapse happens, they'll be able to pick up assets on the cheap. I need for folks to understand that there are some compelling values, in the, it's almost a dirty word now, it's almost a dirty phrase, in the Magnificent Seven. Right? Burry is not shorting the tech sector. He's shorting two companies. Right? And I'm using the word short loosely here. He's actually engaged in put options. So what I want people to do is to realize, if you're looking for diversified companies, let's not name everything tech, right? Let's actually look at the companies. You're going to find out that some of these companies are not only underpriced, in my opinion, we'll make the argument here, but they're diversified. So, Alphabet, the parent company for Google, right? And you want to make that distinction because Alphabet owns Waymo, the autonomous driving company, right? Understand, to catch up to Waymo, you would have to put in a lot of miles, do years of research. The moat is substantial. Whenever you're talking about driverless vehicles, there's safety concerns, right? Local governments want to make sure that the companies they give licenses to have driverless cars have done the research, have the deep pockets to pay out claims if something bad happens, have been successful in other locations. Alphabet owns Waymo, Google doesn't. Right? For that reason alone, I believe Alphabet is the better play than Google. But let me just say, Alphabet owns Google. What does that mean? That means in addition to Waymo, when you buy Alphabet, you're getting YouTube. Folks, Jason Whitlock has a interesting series of videos here. You know that YouTube TV is having a feud with Disney, and so that necessarily involves ESPN. So Whitlock, and he has a panel, is making the argument that YouTube TV, YouTube in particular, right? YouTube, not so much YouTube TV, but YouTube is eating ESPN's lunch, right? Because people now are turning to pundits on YouTube for their sports information, right? And these pundits aren't restricted like a media conglomerate would be, right? That actually shows professional sports league games, has contracts with the professional sports leagues, the content providers, and has to be mindful of offending them. Right? Well, let's go past what Whitlock is arguing. I'm someone who enjoys watching Vegas Stats and Information Network. Right? I enjoy it on YouTube TV. Just understand that VSiN, as they call themselves, has a channel now on YouTube where they're releasing full shows. One wonders why you even need the TV format. If I can just go on YouTube and look up on demand the show from VSiN that I want from a great source, VSiN itself. These are not bootleg, copyright infringement videos. And I could watch it on YouTube. And of course, once you get a certain level of volume on YouTube, they'll embed ads into your work. You'll also have the opportunity to sell your own products, tag items, right? So just understand, YouTube perfectly situated for the future. Of course, Alphabet owns cloud computing, right? Has a cloud computing unit that's up more than 30% year over year. Of course, Alphabet/Google is the Goliath when it comes to search. And oh yes, Alphabet is involved in the AI business. In fact, Alphabet, believe it or not, manufactures its own chips, right? Isn't that NVIDIA's calling card? Alphabet has a deal with Anthropic, where Anthropic's using Alphabet's chips. They cost a little bit less than NVIDIA's chips. What I want people to realize is that Alphabet right now, as I make this video, according to Google Focus, a great site, has a current PE of not only under 30, folks, it's under 26, right? Current forward PE. We're factoring in growth estimates, right? So you're getting Alphabet, again, its cloud unit is up more than 30% year over year. They have the inside track in many areas, in autonomous vehicles, right? People know that they're the search Goliath, great access to large language models. And of course, they're one of the big guns in artificial intelligence, right? They're so far flung. I'm a crypto investor, and I was concerned by all this possible threat from quantum computing. So I did a little research, and of course, one of the major players in quantum computing is Alphabet. So when you buy Alphabet, you're actually buying different markets. They're diversified. And in this era, where things are overpriced, Alphabet is reasonably priced. Again, a forward PE of under 26. In new developing markets, right? Autonomous vehicles and artificial intelligence. Folks, Meta, believe it or not, according to Motley Fool, is even more affordable. Right? Meta, their last earnings report had a one-off tax hit due to the changing regulatory climate. And just understand its forward PE per Motley Fool today is 24. Folks, that's stunning. Microsoft. Folks, Microsoft's a little bit more expensive, but here again, you have one of the insider AI firms. You have a robust cloud computing unit. Amazon's forward PE today, according to valueinvesting.io, is 34. Now, Amazon announced great numbers on October 29th. It's November 11th now, so less than 2 weeks ago. Great numbers. The stock's down 7%. How's that possible? So as you hear about Michael Burry, believing that Palantir is going to collapse price-wise, believing that NVIDIA is going to collapse price-wise, I hope you're not making the mistake of believing that Burry himself believes the entire tech sector is going to collapse price-wise. Right? Because some of the biggest companies in that tech sector are reasonably priced right now, and that's with very heavy CapEx, capital expenditures, investments in data centers to expand AI and things like that. Right? So folks, let's be careful here. Let's be precise when we're talking about what a pundit like Michael Burry is buying put options on. Now let me just point out Palantir. It's up 152% year to date. But looking at price, on Naiman.ai, they placed the forward PE on Palantir at 290.46. Again, 290.46. Right? On Invez, INVEZZ, they placed the forward PE on Palantir at nearly 450. Folks, Palantir is operating in a different range of valuation than Alphabet. Again, the current PE on Alphabet, according to Google Focus, is under 26. Right? It's less than a tenth of the valuation of Palantir being placed on it by Naiman.ai. Right? Understand, Microsoft, Meta, you're talking about different valuations than Palantir. Let's get controversial here. Full disclosure, I own some Alphabet. I've talked about Alphabet here for months. It's been bullish, folks. It's been great for investors this year. Please look at the chart. I also own a little NVIDIA. Right now, folks, just understand that NVIDIA's forward PE is under 33. This is a company that Michael Burry is shorting, right? Or he's buying put options on, right? Just realize NVIDIA's forward PE is nowhere near Palantir's. He's not close to Palantir at all. It's unfortunate in my eyes as an NVIDIA investor that, NVIDIA is being lumped in with Palantir. Right, folks? NVIDIA is in a completely different price range in terms of forward PE than Palantir. right? Let me say too, much has been made of Nvidia's financing deals, right? Burry himself released a graph that showed, Nvidia having financial dealings with different players. I believe Nvidia knows there's going to be consolidation in the AI space. Nvidia knows it itself, right? But folks, again, just like a record company will invest in 10 acts, knowing that only one or two of them are going to succeed. Just like a venture capital firm will invest in 10 startups, knowing that only one or two of them are going to succeed. Here you have Nvidia making deals with companies like OpenAI, right? Maybe Sam Altman is a better salesman than he is a business person. We'll figure all of this out in time. But it gives Nvidia access to OpenAI's technology. It also gives Nvidia an inside status. Should a company like OpenAI, and I am differentiating OpenAI from bigger companies, publicly traded companies like Alphabet, Meta, Microsoft, right? If OpenAI succeeds, then Nvidia is well positioned, right? I believe the people running Nvidia are adults. They understand the risk involved. They're helping a startup with limited resources compared to their competitors. They're helping a startup get footing. If that startup succeeds, great. Nvidia is all set up to make a mint. If that startup fails, okay, then it's a loss, but it's a limited loss. Just like Burry, who's in the world of put options, right? Notional value is different than him going out there and, shorting every, share of stock, right? He's buying put options. Just like Burry has limited the possibility of his losses, so too has Nvidia, right? Nvidia is making deals where Nvidia is saying, hey, we'll give you the chips, you pay us back later. Right, folks? People understand the numbers, right? Maybe OpenAI makes it. Maybe they don't. If OpenAI doesn't make it, then of course, if you have a perfected security interest, Nvidia would be well positioned to reclaim the chips they gave OpenAI. Nvidia would be superior to other creditors in bankruptcy court, right? Food for thought. So I just want to say, I get Michael Burry's position. Understand he's not the only one who feels that Palantir, as profitable as it is too richly priced right now by the market, right? Whitney Tilson, that's a name you need to know, right? He offers a free daily email. You need to get on that, right? He's with Stansberry Research these days. I've followed Whitney for years. He used to have his own newsletter. Now he's with Porter Stansberry's old company. Porter, of course, has moved on to Porter and Company. But Whitney Tilson has been talking about Palantir for a while. And he has been pointing out that Palantir is too richly priced. I understand Burry going after Palantir. Not that Palantir is a bad company. Not that they don't have a long runway ahead of them. Right, folks? You have a lot of governments right now that need to get with the AI game. And Palantir is well positioned in that space. But when your forward PE is north of 290, yeah, there are going to be concerns. But you shouldn't interpret Burry's actions where, the notional value of his put options, etc., derivatives contracts on Palantir, again, is up around $912 million. You shouldn't look at Burry's actions toward Palantir and NVIDIA and reach the conclusion that every company in the Mag 7 is going to hell, that there aren't Mag 7 companies like Meta, forward PE 24, according to Motley Fool, or Alphabet, right? According to Guru Focus, forward PE of under 26. You're missing investment opportunities if you're using too broad a brush and you're thinking that Michael Burry is shorting all of tech instead of him shorting two companies. Right? Let me point out too that Burry himself has been wrong in the past on NVIDIA, right? Which is up over 45% year to date. Right? None of these investors are omnipotent. Understand, you show me a good investor and I'll show you someone who's made some trades that cost themselves a lot of money in the past. Right? Learning from failure is part of the game. Maybe Burry's right. Maybe Burry's wrong. But just understand, Burry's current position doesn't mean that all the companies in the Mag 7 are overpriced. Those are my thoughts. Let me hear yours in the comment section of this YouTube video. Finally, let me close with this. Tesla. Cathie Wood. Now, Cathie Wood has had some great runs. Cathie Wood has also had some bad runs. As I said, you show me the successful investor, I'll be able to point to, if they've made more than one trade in their lives, some trades that didn't work out. Right? Cathie Wood has had her own challenges at different times in the past. But Cathie Wood right now is selling Tesla, and Tesla has a high PE. And I need for people to ask a foundational question on Tesla, right? Because there's a cottage industry of financial videos here online where everyone's saying, hey, Tesla's facing competition from Asia now. Tesla's not the only game in town, right? Tesla's facing competition also from hybrid cars, right? That might be better suited if you're driving in areas that might not have EV chargers, right? And of course, we're hearing about the electrical grid being outdated and, you know, the challenges to getting energy, given the rise of AI, given the rise of crypto and stuff like that. The foundational question is whether Tesla's even an EV company. Are you sure that these EVs are going to be their main product 5 years from now? Because, folks, they have a humanoid robot division, right, in Tesla. And just understand, not all robots are created equally. In terms of commercial grade robots, in other words, the kind of robots I can put on an assembly line that are durable, not a robot that can dance and entertain people at a party or, you know, can be your butler. Not that robot. No, I'm talking about the robot that can be in an assembly line, not 8 hours a day. If you're thinking 8 hours a day, you're thinking about humans too much. No, 24 hours a day. Right? Can I buy Tesla robots, put them in my factory, and have them outdo the output at a far cheaper cost than current factory workers? Right, folks? Think about the runway on that technology. Understand, too, the way things work. People want brand names. Right? Maybe a couple of guys on my block, right? Leroy and Lamont, can come up with a robot and say, hey, look, here are the specs on our robot. We'll sell it for you less than Tesla's Optimus robot. Uh, you win, we win. You know what? Capital investors know what Elon Musk has pulled off in the past, manufacturing electric vehicles. Right? There's a service record out there that's several years long on Elon Musk's products, right? We've seen what Elon has pulled off with SpaceX, right? You mean to tell me that there's a rocket that can actually land and be reused? Folks, that's ahead of NASA. Right now, you understand, if you're in the world of publicly traded companies, of a number of people on your board of directors, you need to ask yourself, what's the easier sell? Think about your career, right? Let's say you're the CEO. You're making some proposal, right? Or you're the CIO. You're making some proposal. You're talking to the board, right? The easy pitch isn't, hey, Leroy and Lamont have created these robots, and in our testing, these robots are the equivalent of Tesla's Optimus robots. That's not the easier pitch. The easier pitch with your career on the line in a political climate where a lot of people are going to be upset that you're laying people off. Right? The easy pitch is, folks, let's change over to Optimus robots. Right? This is a new world. Let's put these humanoid robots on the assembly line. Right? Elon Musk has a long track record of technological brilliance, right? Of being able to deliver. He just got the $1 trillion contract from Tesla. He's the head honcho. You know him. Proven record of success. He has other people behind him. Peter Thiel, folks he's been involved with in business in the past. You understand that Tesla, in terms of raising money, you have a lot of people who Elon Musk has credibility with. Right, folks? The PE doesn't match up right now for Tesla if it's a car manufacturer and you're ignoring the other product lines. But if you include Optimus robots and the potential for them to disintermediate factory workers in factory after factory across the United States, aren't we talking about something different? Right? Their competition might not be, the robot who looks like they could be your butler. Right? The robot who can dance for you and guests. Right, folks? In the commercial world of humanoid robots, right, Tesla might have the inside track in the United States. Right? In terms of durability, brand name, right? Understand there's going to be resistance to adoption of new breakthrough technology by boards that have, obligations to, shareholders. Right? They need to be comforted. You can imagine an older board member who, knows a factory, has worked with the union in the past, understands worker output, and then of course, you have some, new jack CEO who's talking about getting rid of the workers, who's talking about backing away from the union, who's talking about having that factory operate 24 hours a day, not having the costs of health benefits, right? Not even paying out a salary. In other words, folks, displacing a human worker Who's getting Social Security and employee benefits? Displacing a human worker with a robot is revolutionary to the point where companies that might not be viable with human workers, let's say your company's losing money, it's tight, you're looking for change out of necessity, it's a matter of financial survival, right? That company, with it all on the line, they're going to want to go with a robot company they know or they believe they know, right? A brand name. They understand they don't know robots. They need to go with some outfit that looks like it has the intellectual gravitas to master the space. Since Elon Musk is involved with, XAI, SpaceX, Tesla, even the Tesla home division, right? He has a credibility many in the robot space don't have. I know they have a lot of robots right now in China. Do you think any of those robot lines are going to have the credibility with American corporate boards that Tesla's going to have in selling a company that is about to embark on an unprecedented path? They're robots. So Kathy Wood is selling a lot of Tesla right now to investors. All I'm suggesting, and I don't own any Tesla, all I'm suggesting is that you look at the robot story, you look at the extent of the market, you think about the cost savings. If a factory is able to run 24 hours a day instead of 8.5, just think about the bump up in output, right? Tesla robots, according to reports, are selling for $20,000 a robot. Folks, replacing a human worker with a robot would likely be accretive the first year. Food for thought. Let me hear from you. I hope you leave your comments in the comment section of this YouTube video. Thanks for stopping by.